The US dollar looks set for an explosive March following a pretty slow second half to February. So I'll have all the details in today's video, including what I'm watching as we move into a new month. So if we haven't met yet, my name is Justin Bennett, Forex trader since 2007, full-time since 2011. As always, all of this is my opinion only and not financial advice. So looking at the DXY here, the US dollar index, okay, so this is the 4-hour time frame. And as you can see, we had a very impulsive move back here. So we've talked about this many times in videos, but this was an impulsive move back here. Since that time, we have seen this relief rally following the change of character above these highs. Since that time, we had the higher low down here. So we filled the imbalance back here in this area, had the higher low. And then since that time, we've had a lot of internal breaks here, internal BOSs, and higher lows since that time. Now we also had a break of structure up here. Okay, so let's talk first before we get into what's happening internally. Okay, let's talk about what's happening externally, because we have to differentiate as SMC traders what is happening internally versus externally, because it's only when you combine those two that you're going to be profitable and really understand what's happening in these markets. Okay, so looking here at the DXY, you can see that clearly if we look here at the 4-hour time frame, that we have these external lows down here. Okay, so external low, and then we also have these highs up here. Now, this right here is technically our external high, okay, because now we've had a pullback back here into this range following the BOS up here, okay? So this was a bullish break of structure on both the 1-hour and 4-hour charts. So technically speaking, right, in terms of SMC, in terms of market structure, we have buyers still in control, forming higher highs and higher lows within this trend, also giving us that BOS back here, okay, above this high. So technically, the market is in an uptrend. Now, over the past couple of weeks, you can see where we have just had this market coiling here. And I put these trend lines on here to kind of visualize this, right? Where the market right now, all it's doing here in the second half of February is just coiling. Now, typically when you get this kind of price action, it means that what's coming is an explosive move. Now, what we don't know is what direction that will materialize. But what we can say is that following SMC right now, this market is technically bullish here since this low. Okay. Now, yes, this does look like a relief rally following the impulsive move back here. However, one thing to understand too is that we do still have some imbalances here on the DXY back here with candles like this, and then this area up here as well. Now, you can also see this too on the weekly time frame. Okay, so looking back here, you can see that on the weekly, we do have off of this low right up here. So this low right through here, you can see that there is an imbalance, okay, an FVG up here in this area as well. So for March, guys, what we could see is the market come up here and tag this area. Now, another factor here for the DXY, and this is overlooked by many because a lot of traders don't move to the monthly time frame, but you can see that if we go out here to the monthly, this is a channel that goes back to 2011. So since this time, you can see that we've had these higher highs and higher lows. Now, this has been incredibly well respected over the last, decade plus. And if we move in here too, you can see that last month, so in January, it was kind of unclear whether we were holding this level or not. But what you can see here is that this is the last trading day of February. And so far, it does kind of look like we're holding on to this area, right, with this monthly close above. So this is also important to understand because this isn't necessarily SMC, but in terms of market structure, in terms of levels to watch, right, levels that buyers are defending, this area down here is going to be the one to watch right around 97.40. Okay, so again, monthly level that goes back over a decade, really significant area down here for the DXY. Okay, but for the most part, last week, really the second half of February was very sideways. Now, despite that, I was able to put on 7 trades in February, won 6 of them, 85% win rate. And that's not just me saying that, guys. This was me actually sharing it with members this morning, talking about that 85% win rate in February, despite the choppy price action. And then these are the trades that I share in here, all shared in real time here for members. So nothing is hidden. It's all transparent. Now, if you guys do want to join us, then there will be a link on this screen. So click on that link. You're going to get a free SMC course. That's going to show you exactly how I trade SMC full time. Beyond that, you're going to have a chance to join us in Discord. You can join us. You can not join us. It's up to you. There's no pressure here, but I will tell you this, that I have a 30-day confidence guarantee. So if you're not trading more confidently within those 30 days, all you have to do is email me, ask for a refund, and I'll refund every penny. But I will leave you with this. We have a 3% refund rate. So that means that 97% of members who join end up staying because they find value in it. Okay, so let's get back here to the charts. Again, looking at the DXY 4-hour time frame. So very slow going into the end of February. But again, in my experience, what this means here, when you get a market coiling like this here, is that you do tend to get an explosive breakout. Now, it can be tempting, if you're an SMC trader, it can be tempting to look at levels like this and try to play the breakout, okay? But we don't have to do that. And the reason that we don't have to do that is because when we look at the hourly time frame, what we can see here is that since we had the BOS up here, okay, so we've had the breakup structure above this high back here, And so now we have this high right around 98.07. So what this means is that this is now going to be the high to break. So any acceptance above here in March is going to give us a new BOS. So it would then be a BOS above these highs back here. Now at that point, just like this here, okay, BOS up here, pullback, right? Same thing. If we got the break of structure above here, then you'd be looking for a pullback and then longing the retracement. So this right here, if you're waiting for this, guys, it doesn't mean that you're late. It should feel late because you're not buying on the actual breakout above 98.07. Instead, this right here would just confirm that buyers remain in control, and then you're looking for buys on any sell side imbalances down here. Okay, now in terms of a bearish scenario for the DXY. So technically speaking, right, in terms of this external structure here, what you can see here is that really this is our external low down here, and that's because we had the BOS up here above the high. So what we do here to find this is this high over here and this BOS, okay, right here. What you do is you take the lowest point of this, which is this low right back here. That is now our external low, okay, or protected low. So this is the one that buyers have to hold on to in order to keep this overall structure intact. Now, with that said, though, I do think that, if we look at this here on the 1 hour time frame, okay, given the structure that we're seeing here, I think that if we were to get acceptance below, lows like this back here, because what you'll notice is that on this run up back here, what happened is we had the BOS. Okay, so we had the acceptance above that high back there, and then we had this imbalance that formed back here. So all of this here, we see the displacement through here, right? We came back and mitigated this. So because of that, because this has now been mitigated, right? Fully mitigated, what I would be looking for is really for this low over here to hold. Okay, so right around 97.35. Now you could make the case, okay, you can make the case that if we were to get a sweep of this, right, that there is still an imbalance back here off of this candle. Okay, so we could technically see a sweep of this low, but I think that if we were to see acceptance below that, meaning multiple 1 hour candles closing below, then that would start to look a little bit more bearish, possibly down here towards some of these lows in March. Okay, but again, this is really what you're looking at right now, in my opinion. Okay, so going into March, we have this area down here around 97.35. We've got 98.07. So any acceptance above here in March means that we now have a new bullish break of structure above these highs, in which case we're looking for buys, or I'm looking for buys at least. If we get acceptance below these lows down here, so anywhere down here in this area, then that could signal a rotation lower from the DXY back there towards some of those lows, potentially even back toward that external low around 96.5. Okay, so this right here, guys, is just consolidation. I mean, this is the kind of price action that you want to avoid. I did manage last week on the euro, just kind of a side note here. It's for those of you who saw those videos, what I was doing here is we had an internal shift. So back here, we had BOS below the low, we had the change of character. This was all internal. However, what we had here again on this pullback, okay, so pullback into OTE right here, we then had a sweep of this low, we had acceptance above the high. Therefore, I was longing this right here. And again, I did call this out in real time in Discord. And despite the fact that we are still sideways, I did manage to get out of this with a profit. So exited part of this through here and then got out on the rest on this pullback here yesterday. Okay, and again, I did call this out in real time, guys. This isn't hindsight stuff. I'm actually doing this stuff real time. Okay, so there's the exit right there that I did announce in Discord in real time. And then again here, getting out of the rest of the position. Okay, so overall, guys, not great conditions out there for these Forex markets. But again, in my experience, when you get this kind of consolidation, right, it's not necessarily a bad thing because it's telling you that there's some big moves coming. Okay, and in my opinion, in terms of the structure here overall, this low down here is the one I want to see buyers hold. It's okay if we wick below it down here into this imbalance in March, but any acceptance below here, I think would start to look a little bit more bearish here for the DXY. And alternatively, these highs up here, okay, get acceptance above here. You've got a new BOS and we're looking to buy against any pullbacks there from the US dollar. Okay, but until that time, as long as the market's sideways like this, right, there's really not a lot to do, but I think that March will be a lot better than the second half of February. So guys, I hope this helped. Be sure to check out this free SMC course right here on the screen, and I will talk to you again tomorrow in the SMC Outlook video.